that. It seems like a list of the who's who in Silicon Valley who have.
All right, and here we are. Welcome to live coverage of the rate decision from the Fed. I've got CNBC obviously on in the background here. And yeah, big deal. Thanks for everybody who's joining now, and we'll see what happens. The decision should be at 2 o'clock. I remember I was briefly traded in the 30-year and 10-year bond pits, and I remember when there was a big decision or something big going on, that is when you go to your spot. Now, everybody establishes their own little spot in the pit, and, you know, when nothing's really going on, you could walk around, go talk to people, whatnot. But when stuff gets serious or something big is happening, you go back to your one spot. And sometimes that spot was, you know, hard fought after to get. The bigger traders and most influential ones, generally in like the 30-year pit, your spot is in relationship to a broker or, you know, a order flow provider, the person that has the orders, because those are the guys you're trading with. So the more influential and bigger size players will be closest to the broker because they feed them paper. For me, I was a very small trader in the pit. I was capitalized with really around $50,000 to $100,000 only was my capitalization, as I was in business for myself there, and thus I was a very small trader. But there are some small brokers who just need 1 lot and 5 lot type trades filled, and when stuff is really busy, like in a Fed decision day, they can't get the attention of big traders, and so that is the kind of broker that I would seek out as a very small trader in the 30-year pit, is to just fill the orders of these really small orders, which would be inconsequential to a bigger trader. Jerome Powell, there he is. I just watched Power Lunch and saw an interesting interview with the official from the Fed there. And we're going to have to see what happens. My position right now is I am short small volatility here. I am short UVXY via some put spreads. However, it doesn't expire for a while, so I do have time to work on that. It can go against me and then come back. I have my little sample account here up for you. And we're going to have to see what happens here. The big news has been more bad news for Facebook today, as they've been sued both by California and now I think another state has issued a lawsuit against them for the Cambridge Analytica stuff. And also FedEx, the CEO of FedEx was on earlier today and really blaming the political situation for FedEx's woes. FedEx is, I believe, $100 off the highs. Let's take a look at that now. Am I doing that wrong? Yes, I am doing that wrong. Yeah, it was up to 274, now down to 169. So over $100 off the highs. And let's see what time. 1:49. So we've got about 11 minutes. Let's keep up the CNBC on the background here so that we're mindful of that. We did get the rally coming into today, and we'll see if that is sustained. Let's take a look here at the chat. Hey, folks, what's going on? All right. Did I was wondering, when you were saying strangles before at that other thing, what were you talking about with the strangles? Were you talking about UVXY strangles? And let's see. You know, one of the things that makes me really proud about this particular channel is that there are people here from both sides of the aisle, and it's not like a partisan political situation. I try to keep politics out of it. Obviously, politics are attached to this. I've got Cool. I try to keep politics out of this. I do come from a political family. My grandfather was a state senator for the biggest little state in the Union, Rhode Island. I believe he ended up as a Republican but was a Democrat at some point. And of course, I do have the relationship to Abraham Lincoln, who was a Republican. But back then, Republicans were Democrats and Democrats were Republicans in a way. They sort of switched at some point. And my family is largely, my father is a sort of a local politician here on Cape Cod and is definitely for the GOP side. My uncle is an organizer for the Democrats overseas, and so you can imagine the dinner table conversations at my home over the holidays of parties fighting back and forth against each other. But I think it's important to have both voices present. And, you know, it's upsetting to me when, like, someone comes in and states the party line by line, whether it be for Republicans or Democrats, and won't budge off the party line. I think it's very easy to just pick a team and go, yeah, those other guys, they suck, they're awful, you know, they're idiots, and not actually think about the issues for yourself, issue by issue. I like to believe that I am convincible, that you could convince me one way or the other on an issue if you make a good case. And I want to remain convincible on the issues. I think that we've gotten so polarized lately in politically, one side against the other, and I really wish that we could somehow come to the middle a little bit here. All right, so as we look, let's take a look at Facebook here, down 7 now, slightly off the lows. If we go to the daily here, so it got down to 133. I mean, it's got to be a scoop here somehow. I mean, at some point it's a scoop. It's a scoop at $100, right? So I talk a lot about my friend who bought it for, I think he bought Leaps when it was around 40 and rode it all the way up. But I've been thinking about scooping Facebook at some point. It's got to be a scoop somewhere. Right now there's bad news, and maybe it's the time to scoop it. I'm not sure. Meanwhile, Tilray, we did get the pop up to, it was up to 80 this morning. I think it's a sale here. I think it was a sale at 80. I think it's going to creep back down. I don't think its woes are over. I think that rip up yesterday was actually a selling opportunity, and we will go back through 64. Let me get out of the way here. I'm going to go back into Ghost. I think I'm going to go back into Ghost mode here so that you can see through me. Okay, so let's take a look at the term structure as we head into this decision here. It's weird because although we already had expiration, I think it's still showing the front month. Yeah, it's still showing the front month, but kind of ignore that. And looks pretty flat. There's not going to be much contango between, you know, today coming into tonight. The Jan and Feb are pretty flat between them. There's not going to be a lot of backwardation going on here. But we did pay a big penalty with backwardation yesterday. It's showing 15% now, but I think it was like, probably got marked to like 12% yesterday. But pretty flat. This is kind of what's expected after expiration, is that the futures are not that responsive to spot because expiration is so far away here. Remember, we're either we're all January or we're all January and just a teeny bit of February in the futures right now for UVXY and VXX. And so what I was talking about before was basically that if the VIX stays up here, these futures will get dragged upwards at some point. They can't stay like 2 points below the spot forever, but the anticipation here is that this will come in at some point. I think the most fireworks we would see here is if they don't raise and then we get a rally and then it gets whacked lower. That would be probably the most exciting thing that could happen here. I guess what they were saying on Power Lunch is that the chances of them not raising have increased a little bit lately, but it's still odds on that they will raise. We've got about 5 minutes until the announcement right now, folks. So pretty exciting. The VIX currently 23.33. Dow up 341, E-minis up 36, and SPX up 25. I will put on this CNBC as we get closer here. And we can listen along with them. It's pretty cool how Thinkorswim gives you CNBC in the background. It gives you CNBC free with the membership here, especially if you're like outside the United States or something, or you don't have cable. I actually don't have cable television in my house. I only get internet, and I think that's like a continuing trend here. Let's see. So we have 4 minutes until a decision here. I don't know how people are positioned. Are most people waiting till this is over to put positions on, or do you have positions on, or are you long, are you short? What are you doing here? TLT, we can pull TLT up. I'm not a huge bond guy, so I'm probably not the best guy to ask on this stuff.
Welcome back. We're just minutes away from the Fed's decision on interest rates. So let's get a check of markets now going into this. The Dow's up about 278 points right now, 279, still below the 24,000 mark. The S&P 500 there is up 26 points, so better than 1% gains for the Dow and the S&P. The Nasdaq trailing, still up 60 though. Let's bring our panel back. David Kelly is Chief Global Strategist with JP Morgan Funds. Alicia Levine is Chief Market Strategist with BNY Mellon, and Michael Farr is President and CEO of Farr, Miller & Washington, and a CNBC contributor. So welcome back to all of you. Alicia, since you're joining us here, what are your expectations? What do you think the market's doing here ahead of the meeting? It seems, they were bid up in anticipation of this.
Right. So we think the Fed goes today with its one hike simply because we're at 70% expectations for that, and that tends to be what happens. We think then for next year, there's a bringing down of number of hikes to about 2, but we think in actuality.
They've been talking a lot about this dovish hike thing, meaning that they're going to come out with a hike, but then in the comments, they're going to have a speech at 2:30, and that they would come out in the comments after and say, we're not going to hike as much next year, probably. Okay, we've got 3 minutes to the decision now.
And still, there's no inflation, and it's very hard for the Fed to move further. The other thing is watch to date on what they think the long-term neutral rate is, because if that comes down below 3, maybe even to 2.9, that begins to make it look like maybe they get away with just 2 more hikes today and 1 more up beyond that. Michael,
what about you? Your expectation going into this, are you with these two, where you think it's going to be a dovish hike, so to speak?
I'm with those two, and I think Alicia came out with it about perfectly. But I think that the risk to a market that's up 250 going into this with very specific expectations is to the downside. I think there's a big likelihood that somehow this statement from Jay Powell will be interpreted in a way that's somehow a bit disappointing.
Is it going to happen that no matter what they do or say right now, we tank? I mean, that's what's been happening lately is regardless of the news, we end up tanking. So I wouldn't be surprised if we just tank no matter what is said or done here. We are expecting a raise. They're saying, I guess Goldman Sachs came out and said 95% chance of a raise a couple of hours ago. Markets are off the highs of the day right now. I think we were up over 400 points in the Dow. It's funny how they always quote the Dow on TV as if the Dow is so important, when I would think the Russell or the NASDAQ would be more important these days than the Dow, but they just love to quote the Dow for some reason. I guess it's because it's traditionally been what they always quoted. I always like listening to Steve Leisman talk about this stuff. Okay, so we're a minute and 20 seconds away here from this huge announcement. And it's weird why this is such a huge announcement. I guess part of it is it's a big profile because the president came out against it. I think that's what's really raised its profile, because this was pretty much been a given as they were going to raise rates, but it's become a big thing on Main Street now that the president has come out against it. So we'll have to see what happens here. Does Powell, quote unquote, cave to pressure from the White House? And how does this all play out politically? We've got less than a minute now to go until we find out about rates. I'm going to shut up now and just put CNBC on and see what they have to say when this comes out right now.
Late cycle. I mean, I want to say long cycle because we know it's a long cycle. We don't know how late we are, in fact, in this cycle. It could go a lot longer.
And I hear these things don't die of old age, but they could die from Fed mistakes.
Exactly, from the Fed.
From Fed errors.
Look, I think the Fed could definitely extend the cycle here. The question is whether their earnings can hold up. So you can have a financial market that is a little disconnected from the economy
all right,
right
so
now.
15 seconds away.
Doesn't mean
Here
it
we
won't
go,
meet up
folks.
Eventually, but right now it's disconnected.
We are moments away. S&P 500 is up by 27 points or 1.07%. Let's get to Steve Leisman now for the Fed decision. Steve.
Here we go.
The Federal Reserve raises interest rates by 1/4 point.
They
to
raised.
A new range
They did
of
raise.
2.25% to 2.5%. The Federal Reserve says it judges that some further gradual increases will be needed. Again, the Federal Reserve raising rates by 1/4 point to a new range of 2.25% to 2.5%. The Fed did add, while it still says it sees some further gradual increases as needed, it adds it will continue to, quote, monitor global economic and financial developments and assess their implications for the economic outlook. So a nod to some of what has happened in markets of late. On rates, on future rates, it's a bit dovish, not completely so. The Fed lowers its outlook for the number of
It looks like we're
2019
selling off here.
from a consensus of 3 to now 2, and it's seen going from to 2.9% from the current range of 2.4%. So it took out one hike for 2019. It lowered the consensus for neutral to 2.8% from 3%. So it hits the middle of that range by its consensus estimate next year with 2 more hikes. But the average Fed member still sees the Fed going 1 hike above neutral, and that happening in 2020. On the economy, the Federal Reserve continues to evaluate the economy as strong. It lowered GDP for 2019, though, by 2 ticks to 2.3%. Unemployment is unchanged at 3.7. Took 1 tick off its forecast for inflation next year to 1.9%. But the current assessment of the economy is a carbon copy of the November statement. Sees the labor market continue to strengthen. Economic activity rising at a strong rate. Job gains strong. Unemployment rate declined. Household spending continued to grow strongly, and business fixed investment moderated. Inflation near. Now, let me give you a little more details on the rate outlook, and you may want to get a pencil out for this if you're playing future Fed rate hikes at home.
Okay, so it seems like a non-event here right now, folks. The markets are off slightly. We'll wait, I guess, for a reaction from the president. I have the Twitter feed like in front of me here, which I'm updating. I don't know if there will be a reaction from the White House right away, but it seems like a non-event here at this point. There was no like knee-jerk reaction from the markets as far as I can tell here, which I guess should be good for volatility to come in here. We are backing off a little bit. We'll have to see what happens in the next 15, 20 minutes, but if anything, it looks like we're moving slightly lower here. But they will have the news speech broadcast at 2:30, which will color these comments, and what they say there might be more of a reaction, but not that much of a reaction here in the market so far. It seems to TLT going higher here, but it seems to be a non-event so far. We'll have to wait and see, of course. Seeing a little bit of a sell-off now in the E-minis. They were up 20, now only up 14. And it could be, like I said, this could be a situation like a lot lately where we just sell off no matter what happens. And we are starting to sell off now here, folks. So E-mini's up 6 only now, and the VIX seems to be moving higher. But largely a non-event here. As we, so we're going to await the news conference at 2:30, but it appears so far that this is sort of a non-event. The VIX is up a little higher than it was, and the markets have sold off slightly, but so far not a huge reaction. market's down slightly, but sort of a non-event so far. We will see what happens. I am, of course, short the VIX right now, and so would like to see a rally, but we're seeing nothing to down a little bit right now, and now E-minis coming back a little bit. So maybe people are still going to wait for the comments, or maybe this gets digested a little bit more, but not a whole lot going on right this second. Once again, the headline is they did raise rates. This was expected. This does sort of go against the president tweeting to not do this. As I said before, though, that could be viewed as kind of a smart political move by the president to sort of cover his bases if the economy goes lower. So I'm not of the camp that this is such a shocking thing that the president would come out and do that. There is a long history of presidents getting involved with the Fed and trying to influence the Fed. So our current president is just in line with that tradition. We saw stuff rally, and now we're seeing it sell off again. Really, minute by minute, we're just moving back and forth here, but not a whole lot going on. It seems like a non-event so far. If we pull up the 1 minute here in the E-minis, you do see that move up, move down, back and forth. But so far, pretty much of a non-event as these things go. The VIX starting to back off again a little bit. If I pull up the VIX chart, you can see it down, then up, and now kind of backing off back down a little bit. I would think if we stay around here, if the equity markets stay in positive territory, we will get a vol crush at some point. It's really just a question of whether people want to give up on their puts in the SPX right now, and if they see selling. So there you have it. Pretty much of a non-event here, folks. And we will wait, of course, for 2:30 for the press conference. But thanks for joining me here, and stay tuned for market news and financial commentary here on the Short Vol Show live, and have a great holiday if I don't see you before then, folks. Thanks for watching.